Bank of Canada just cut the rates again. Didn't we hear about the inflation going up in October? So what's going on? Inflation last month numbers were 2%, up from 1.6% from September. Grocery prices up by 20%, and property taxes up by 5 to 6% in almost all the cities. Isn't it inflationary? Then why Bank of Canada is basically reducing the rates? And here's the trend most people miss. Bank of Canada is not looking at 1 month of data. It's looking at a trend. In September, we saw one of the biggest declines in inflation to 1.6%. Yes, in October it went up to 2%, but it's only for 1 month. On top of it, we have a core inflation which is closer to 2.5%, which is still manageable. And the biggest thing they're looking at is our economy is in excess supply, meaning the goods and services we are producing are not being consumed by the people we have over here.
What does excess supply mean? It means there are more goods, services, and workers available than people are buying or hiring.
So this is deflationary instead of inflation. So the bank's concern is not inflation, it's how the economy is doing. The economy is slowing down. The GDP growth is slowing down. Young people are not getting jobs. Unemployment rate is at its highest. It's closer to around 7%. Business spending is slowing down. Consumer consumption is declining. So these are the factors which making it bank to basically reduce the interest rates. So the strategy Bank of Canada is trying to do right now is they're trying to stimulate the economy. The inflation sitting at around 2%. Economy is slowing down. And we saw the biggest drop in rates ever since we had that COVID and the rates went up. They tried bringing it down, but now when the economy is stalling, they want to basically reduce the rate so that we can get the economy going back again.
Think of it like a car. Inflation was a problem when the economy was overheating. They slammed the brakes, rates went down. Now the car has stopped and they're worried it's going to stall out. So they are hitting the gas pedal again.
After the rate cuts, it takes time for the economy to get back on track, sometimes 6 to 10 months. So they're trying to do now before we get into major recession. So here it gets very interesting. So October inflation numbers were not because of what you think, it was because of higher property taxes in October. Most of the property taxes in cities went up and that came into inflation numbers. And on top of it, the fall in gasoline prices in October was less than September. So these were temporary factors due to which we had that uptick in inflation. So the Bank of Canada categorically said that they're going to look only at the trends, not at the temporary factors. So we're not going to panic about 1 month of data. We're going to see the trend, what's underlying in the economy. But there are legitimate concerns. Shelter costs remain elevated at around 4.6%. Service costs are also up by 1.6%. Wage growth is there in certain, certain sectors of economy. And on top of it, Trump's new administration that came, they have tariffs, which is creating uncertainty. But all this is basically absorbed by the excess supply that we have. And that's why we're not feeling the inflation, because the excess supply is basically absorbing all this. So what will happen if Bank of Canada didn't cut interest rates? If they didn't cut interest rates, the economy will get weaker. Unemployment will keep on going up. Consumer spending will keep on declining. Businesses will stop, producing more. So they are basically doing it in advance so that these factors don't, shape into the economy. Bank of Canada is basically playing a balancing act. So basically, they know that inflation is right about 2%, which is their target. Economy is slowing. There are job losses happening. Businesses are suffering. So they're trying to basically reduce rates to basically pump up the economy. And they're hoping that by doing it, economy will revive in the next year or so. The real question is, will the drop in rates, will it avoid any recession, or it will create some kind of inflation again? That's a $1 trillion question, only time will tell. So what do you think? Is Bank of Canada cutting the rates too aggressively, or they're right about cutting rates? If you like the video, hit the like button, or you can subscribe to get similar content.